Just right off the bat, Lindsay, what do you think? Powell gets renominated? I still think he gets renominated, don't you?
I think it's hard to make the case that he shouldn't be renominated.
Oh, okay.
He led us through the worst of the crisis. He's been at the helm, and he creates a certain level of comfortability and certainty for the market. So it'd be difficult for Biden to make the case that he does want to change up leadership there's still a number of risks to the outlook at this point.
The numbers that we're seeing here, Lindsay, and how it all factors into just inflation worries. Gold's moving a little, but not a lot. It's not at new highs. Where are you on the T word? It's funny how we focus on individual word. That's the word of the, I guess we'll see. It was already a word, so it can't be in the OED, but it certainly is used a lot.
Well, we look at this morning's numbers, and certainly the consumer appears to be out in the marketplace spending more. This is the third consecutive month of positive spending activity. But as Steve mentioned, this is not just the consumers buying more, but they're paying more for these goods. So in good part, I think this is reflecting consumers' trepidation about supply chain constraints, inflation, really being of the mindset, we better buy now because next month prices will be higher if we can get goods at all. So not to say that the consumer is going to fall off a cliff by the end of the year, but there are a number of factors pulling end of the year spending nearer in October and November.
Well, just comment on all the things that we talk about, and I'm talking about money supply growth or staying at the party too long, staying with these emergency accommodations too long, maybe because of Delta. I mean, maybe there was a good reason for it. But in your view, have we stayed too long, and is the Fed behind the curve right now? And even if it's not everybody says it's not going to be the 70s. Well, it may not, be history may not repeat itself, but it may rhyme at a lower level that is still really unpleasant for people that are paying, in a cold winter, or that suddenly you see these, they call it a tax, really. It's as bad as a tax on a lot of people.
It's absolutely a tax. Yeah. I think the Fed has absolutely lost control of inflation at this point. Now, they continue to tell us that it's transitory, that as the economy recalibrates, we will see price pressures come back down to a more palatable 2% level. But we have to remember that wage pressures are also on the rise, and wage pressures tend to be more sticky than price increases due to supply chain constraints. So yes, prices rose because we're having these supply chain difficulties, and they likely will come down in the medium term as balance is restored. But wage pressures have largely been the result of artificial policy measures distorting the structural balance of the labor market, the effects of which have already proven larger than expected and will likely be more persistent. So this is going to create a very difficult scenario for the Fed as the economy recalibrates to a much lower level, but inflation continues to elevate not only through the end of the year, but into 2022 as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.